this topic is very special because we always talk about utility scale, large scale solar initiatives. And this is all about really that small is beautiful. It reminds me of an economist, Schumacher, who talked about this whole idea about how the small needs to be scaled up, and how, what is that last mile connectivity, which is often the problem in India, right across the energy segment, that needs to be achieved. So without any further ado, I really ask the Climate Policy Initiative team led by Dhruba to walk us through the presentation on this topic. Just a few housekeeping tips as well. Request to all of the attendants to please mute yourself. Use the Q&A section to ask questions. We'll take in questions via the chat box. The questions are only visible to the panelists, so please feel free to ask any questions. Thank you. Over to you, Dhruba.
Yeah, thank you, Gauri. Thank you, Nolti. Thank you, Gauri. I won't take too much time, but just try to introduce this program that we have been running in India for the last 4 years now. I think this is, in short, a project preparatory facility for distributed solar, which includes rooftop, mini-grid, solar home lighting systems. And by way of success, this program has been running for 4 years, and we have managed to support quite a fair bit of projects, about 30 of them, and help them finance over $200 million in these difficult segment of, I would say, renewable energy. And at this, I would also take this opportunity to basically thank USISPF for creating this forum. And I would thank the US government, particularly from the point of view of USDFC, which it was an OPIC initiated program, which is USDFC today, MNRE and IREDA, who have been partners into this, and finally US foundations led by MacArthur Foundation, who have basically funded this entire program for it from happening. So what we have done over the last 4 years, in short, is we have created a pipeline of over 200 odd projects in the distributed space. Obviously, the capacity and the finances and the funds and the grants are not enough to support all of them, but there is a huge lot of, I would say, economic activity in this space. Whatever we have managed to support has ended up in a mobilization and a creation of about potential creation of 300 plus megawatt. And the presentation, a short presentation, will be made by my colleagues Vijay and Kushagra. So I'll end here and hand it over to Vijay and then to Kushagra. Thank you.
Yeah, thanks, Dhruba. Hello, everyone. This is Vijay Nirmal from CPI India office. Thanks for joining us for this session, and hope everyone is safe and doing well. Thanks to the USISPF team for giving us this opportunity to talk about the distributed solar initiatives being managed by CPI. We have a short presentation. It would take 15 minutes. I'll talk about the DRE initiatives of CPI, and then I'll request my colleague Kushagra to talk about insights from our Future of DRE report. Just a brief background about who we are and what we do. Climate Policy Initiative is a climate finance advisory firm with deep expertise in policy and finance. We have offices across US, UK, India, Indonesia, Kenya, and Brazil. We work with stakeholders in accelerating finance for the transition to a low carbon economy. We work with the governments, the multilateral and bilateral institutions, and also the private sector, including investors, developers, and the commercial lenders. Our global flagship program is the Global Innovation Lab for Climate Finance, and it's also called the lab. This lab, or the platform, identifies, develops, and launches innovative financial instruments that can attract private capital at scale. So far, we've been able to support 49 instruments, and these instruments were able to mobilize more than $2.45 billion of financing till date. Another major work that we do globally is the global landscape of climate finance. This is a comprehensive assessment of the climate finance flows across geographies, sector-wise, instrument-wise, with details on the sources and utilization of proceeds. This is a widely referred to report, including by UNFCCC, think tanks, and various other key stakeholders. India office focuses more on the technical assistance programs, currently in the distributed solar domain. We also are very active in the sustainable finance and green finance initiatives in India. On the DRE initiatives, this is just a landscape of the current RTS installation in India. The current installed capacity is at 6.7 gigawatt compared to the policy target of 40 gigawatt. The installations are led by the commercial and industrial segment with more than 70% of the total installations. And in terms of the business models, it's the CapEx model, which is still the dominant one. OpEx model has been gaining traction over the past 3 years. And the total capacity or share of OpEx in the total installed capacity is at 30%. Several policy and financing barriers constraining the growth of rooftop solar and distributed solar in general. And this slide talks about the key financing barriers and also how some of our initiatives are trying to address these barriers. Our project preparatory fund, which is the US India Clean Energy Finance, this initiative tries to address the barriers related to information asymmetry and high transaction costs and time. Information asymmetry is because of limited information available to assess the bankability of projects, and high transaction costs and time is because of the nature of DRE projects, which have small transaction ticket sizes. Another initiative that we manage is the US India Catalytic Solar Finance, and this initiative tries to address the barrier of perceived risk of creditworthiness with a specific focus on the MSME rooftop solar off-taker segment. Talking about USICEF, US India Clean Energy Finance is India's first distributed solar project preparatory fund with an objective to enable debt financing into the sector. This is a joint initiative of $20 million between the Ministry of New and Renewable Energy and foundations including the MacArthur Foundation, Hewlett Foundation, and Good Energies Foundation. The facility provides support to project preparatory activities of various distributed solar entities, including rooftop, mini grid, off-grid solar, and also the financial intermediaries who are active in this space. The nature of support is in the form of grant capital to meet the costs related to various preparatory activities, such as the technical feasibility studies, commercial feasibility studies, market assessment, legal structuring, transaction structuring, environment and social impact assessment studies. So all preparatory activities which would help the beneficiary approach a lender for debt financing. The costs related to those activities can be met through our grant support. So the way this facility works is CPI, which is the program manager for this facility, evaluates the applications received from various potential beneficiaries, and this evaluation is based on certain project criteria, which is a combination of credit assessment metrics, development impact metrics, and additionality criteria. And post that, we put up these cases to an advisory committee, which has members from the ministry, IREDA, and the lending community, as well as independent technical experts. Post review by the advisory committee, we provide grant support to the beneficiaries through our empaneled consultants. So we execute contracts directly with the service providers to get the work done for the beneficiaries. And parallelly, we initiate discussions with our partner lenders to enable debt financing for our beneficiaries. While this facility started off with OPIC or USDFC now and IREDA as the principal or anchor lenders, we've also partnered with Tata Cleantech Capital, PTC Financial Services, and IndusInd. And we also work very closely with Seekers Finance, FMO, Proparco, Responsibility, and various other lenders to provide them a pipeline of bankable DRE projects and enable debt financing. For the past 3.5 years of operations, the facility was able to support 43 applicants in 6 rounds of funding. And these beneficiaries are across rooftop C&I, residential, institutional, mini grid, off-grid solar products, small ground mounted system, and financial intermediaries who focus on the DRE space. So over a period of 3.5 years and 6 rounds of funding, we've committed close to $6 million of grant capital to 43 entities. Some of the key project preparatory activities or high impact activities that we've supported and which have helped the beneficiaries raise debt financing include credit assessment frameworks, primarily for assessing the creditworthiness of unrated off-taker segment, technical feasibility studies, rating of EPC vendors, financial advisory, commercial feasibility, transaction structuring, environment and health and safety studies, etc. We've also supported unique business models within the OPEX category, which are deferred financing mechanisms as well as sale and leaseback kind of structures. With this support, 60% of our beneficiaries were able to raise debt financing from 15 different domestic and international lenders. The total debt mobilized is around $210 million, and we expect this number to reach $250 million by the end of 2021. While 60% of the beneficiaries were able to raise debt financing, the other beneficiaries are currently in the process of fundraising, both debt and equity. This is a snapshot of the potential impact of the facility. A total debt mobilization of around $300 million by the end of the program. A total capacity installation of around 600 megawatt, leading to a total job generation of around 20,000 and avoided CO2 emissions of over 800,000 tons per annum. These are some of the feedback that we've received from our beneficiaries, and almost all the beneficiaries have found this facility quite useful in helping them raise debt financing. And it's not just the beneficiaries, but also the partner lenders found this facility of immense help, as this provides a pipeline of bankable DRE projects and also lowers the overall transaction costs for debt financing. So these are some of the views from our key stakeholders of the facility, Mr. Manish Chaurasia from Tata Cleantech and Mr. John Ballback from the MacArthur Foundation. So this is it about a short presentation on US India Clean Energy Finance. I'll just take one more minute to talk about the other two initiatives. One is the US India Catalytic Solar Finance, under which we've developed a credit guarantee mechanism to drive uptake of rooftop solar within the MSME segment. The MSME segment rooftop solar has a potential of around 18 gigawatt, which is largely untapped. And we expect this instrument to help enable debt financing flow into the sector. So we are working very closely with World Bank on operationalizing a guarantee line for this sector. The other facility is a recent one. That's a financial sector engagement work, which is again focused on MSME rooftop solar. And we've partnered with KFW, Encourage Capital, and US Foundation to roll out the program. So I'll stop here, and I'll request you to please reach out to us if you would like to know more about our initiatives in the DRE space. And I'll request my colleague Kushagra to talk about the key findings from our Future of DRE report. Thank you.
Thank you, Vijay. So based on our learnings from managing the ICEF program for the last 4 or 5 years, we crystallized it into a report based on our learnings plus what we think how the market should evolve in the coming years and what are the roles of various policy and financial stakeholders in this. So, next slide. So for the report, I think it's a 30-40 page comprehensive report that we prepared, both backward looking in what we have seen the market and how we feel it should evolve. And in the first section of the report, we covered the current market landscape for rooftop solar and distributed solar in particular. So we found that the RTS industry is largely fragmented so far, with only a few players reaching a pan-India scale, which have either been backed by large Indian corporates or by foreign private equity capital. The remaining players kind of remain as smaller EPC or system installers who execute orders for the larger players. Similarly, the off-grid market, which is the mini-grids, mini-grids, the home systems providers, that still remains very commercially unfeasible so far and has largely been dependent on subsidized philanthropic capital rather than commercial capital. And if you just go back, and and we did some projections in the chart, which we see that to reach India's stated goals, what is the kind of investments which would be needed and what are the downstream applications of distributed solar, which can help to more penetrate the market, such as home systems, pumps, cold storages. Next slide, please. So some of the key challenges for the distributed solar as well as the downstream applications which we proposed in the report, we identified as firstly that the cross-subsidy model of the Indian power sector, where the agriculture consumers subsidize the more higher paying commercial, industrial, as well as the higher end residential customers on the kind of the tariff structure in the market. And what we discussed in the earlier slide, where the smaller players have not been able to scale up, there we found, and a lot of them are also beneficiaries of ICEF, which we have supported, is that information asymmetry was a big factor, where the smaller players did not have the kind of startup capital to access transaction advisory and other supports which were covered in the earlier slides, which helps them to be more project ready. At the same time, private capital has a lot of alternatives, and impact investment in India is largely tended to favor the lower hanging fruits in terms of health, financial inclusion, and other things, where energy has been largely neglected. And secondly, even within the energy sector, the focus has largely been on more mature stage projects rather than kind of early stage projects, where the depth of the impact is more as compared to the scale of the impact. So next slide, please. So some of the recommendations which we propose on the policy side for the different downstream applications are more focused on kind of decentralizing. The core thesis of hypothesis of the report has been that to make the distributed solar sector more scalable, there should be a more of a decentralized approach, where the DISCOMs play a meaningful role, as well as they are not facing the threat of disintermediation. At the same time, they are finding ways to be a part of the ecosystem and collect kind of revenue through a model which goes to the private market. And in particular, and also like for the more difficult kind of projects which we discussed, like off-grid solar, which involves cold storages or productive use appliances, we feel that the emphasis of the government should shift from just capital subsidy towards more of a ICEF kind of a project development support model, which allows entrepreneurs to not just subsidize the product, but as well as develop commercially feasible models. And on this slide, we haven't mentioned some of the financing recommendations which we propose, but we find that the depth of the market in terms of financial solutions can also improve the implementation of rooftop solar if things like credit guarantee mechanisms or securitization of smaller solar projects kind of mechanisms come up, as well as more models such as the ICEF coming to the market. They can help on the financing side to scale up the market. So I think that is pretty much it from my side.
We can't hear you, Gauri.
I'm so sorry. Thank you so much, Vijay, Kushagra, and Dhruba. Thanks for keeping to the time and for sharing your report and the key findings. And also, Vijay, and I want to acknowledge you that you bring this wealth of knowledge from the international financial sector, from Bank of Muscat, ILFS, Reliance Infrastructure as well, and Kushagra from the IFC. So thank you so much. So now we'd move to the second half of our program, which is the panel. So Dhruba, I'd like to start with you. I think you have the benefit of really working in a 360 sense with end-to-end from the source of the funding to the beneficiary of the funding and the ideation of the project. So how do you feel this DRE segment fits into the broader climate agenda for India, and are we on track? Are there any major barriers?
Yeah, thanks, Gauri. So also because all of us in this program, in the work at least a significant part of what we do is in the distributed clean energy space. So I might be a little biased in that way. But to be clear and to the point, if you actually look at the numbers of distributed renewable energy in terms of what was planned 5 years ago by the government of India from a policy perspective, it had targeted 40 gigawatt, right? So we're nowhere close to that. We are somewhere around 6, somewhere between 6 to 7. So that basically tells you the story. If you talk of potential for the distributed renewable energy sector, I think it is 10 times as much. I mean, 10 times of 40.
Wow.
Because from a solar point of view, it is the question of how we harness, how we realize, how we do the energy transition. You have a lot of questions around energy transition and that you see and hear, and it gets talked about. But it's a transformation to think from a concept of energy getting generated. I think I should not take up so much time in talking passionately about this subject, but there are experts in this field, both on financing and renewable energy generation. We should hear them. But in a very simple manner, it is like you produce electricity at some point and then you transmit and then distribute. That model needs to change. The world is about becoming both a consumer and a producer of energy, which our networks, which our grids and networks are not able to take it in because there are technology problems. Technology problems can be solved, but what cannot be solved or what requires policy intervention and regulation to solve is the institutions, is the distribution utilities, is the regulation of tariff, is the allowing of how this distributed energy will come into. It has a massive role to enable India's energy transition, to create development in a non-farm economy today, to build jobs. Whichever way you look at it, improving the quality of electricity that is supplied, whether it is from a quality of electricity, India is reasonably well connected, so access is not an issue. So from every perspective, whether it is development, whether it is health, whether it is education of children, whether it is energy transition, whether it is carbon mitigation, I think distributed renewable energy has a key role. And I think that is what Kushagra was talking about when he said the future of DRE looks bright, but needs to be enabled. Thank you.
Great. Dhruba, I think you touched on a very important point of energy transition, and what you pointed out are elements of a power systems transition that also needs to happen. How consumers can become producers of energy and how that comes into the system, how it's integrated into the system without taking away the role of the utility. So since you brought out the point on the energy transition, this would be a great segue to bring in Sanjeev from Amplus, who has had a successful venture in distributed generation with the top of that layer, which Kushagra showed in his chart with a portfolio of C&I customers. And in terms of the energy transition, he has attracted big investment after growing this venture, Amplus. So Sanjeev, moving to you, how did you make this happen? I mean, what is some of the learnings you can share with us, which could also help this sector go from the C&I, which seems to be a more mature sector, into the MSME sector?
Yeah, thanks Gauri, and thanks CPI for inviting me. I think it's very, very interesting sector because I come largely from a background of electricity sector, having worked in coal, gas, and hydro and wind and all types of possible technologies in the development of the electricity sector, and also seen at least 2-3 cycles about how the investment in the Indian electricity sector has come, and it goes through a complete, almost like a boom and bust type of cycle. So we have seen 2-3 cycles clearly, very, very clearly, in the 90s and the 2000s with the multinationals, with the coal sector, and all types of things. We have seen that companies have tried to do very hard, but still they have not been able to do what they actually set out to be. And this is literally like the third or fourth wave where it's more like the renewable energy which is coming into the picture. So having seen those types of structural flaws, I would say structural flaws in the Indian electricity sector, which basically means that we have a customer, the distribution companies, who doesn't have the money to pay. It's a simple thing. So you are in a situation where the expenses are more than the revenues for your customer. That is one part. So that gives rise to what should you do in this situation. The second interesting part that happened was that if this is a situation and there is a new technology which is developing, which is allowing you to sell directly electricity to the consumers. So you are literally bypassing the middleman. So the distribution companies were the middleman. They were buying electricity from the IPPs and selling to the consumers. In the process, because of their own inefficiencies, they were not able to make their own ends meet. So the inefficiencies can be because of technical or because of regulatory or because of the politicians, as simple as that. So it can be any of those factors. So if you combine these two factors and say there is a technology called solar, which can help you to reach out to every customer directly, and you want to bypass that middleman. So what do you end up with? So you have a subset of the technology which is clearly the rooftop or the distributed energy. And also the third factor which worked well in our case was because this is a startup and obviously you don't have access to very large amounts of capital to set up like a 500 megawatt plant on day one. You go out and say, what can you do with a limited set of capital? That's how, if you combine everything and say, now what do I do with this, given this understanding? That's how we zero down on this C&I segment. So now C&I clearly has been the first sector to take off, not because C&I guys wanted to do it, but because they were saving more money. And
So it was an economic reason to do it.
Largely economic reason. Of course, there is another set of good corporate citizens who will say, I also want to become green. But that's, in my opinion, that's more like a annual report type of a statement. It's not like something which people will say and pay you 25% extra and saying that I really want to buy it because it is green energy. They still want to save their money on that one. So we have been working on that thing. Fortunately, now one of the things that we did was that we never depended on subsidy. If you remember in 2014-15, there was still a lot of subsidy coming from the MNRE, etc. We said if there has to be a business model, it has to be not dependent on any sort of a fiscal benefit. Because what you're doing is you're giving it artificial legs to stand on. And once those legs are taken away, then what do? So we decided to do that, okay, whatever is the tariff, we have to bring out efficiencies in our own working so that we create a mechanism whereby we are able to sell this electricity without any sort of fiscal benefits. So this is the other thing. Now we have come to, now we have come to that final thing where it can move to the next segment of the residential, etc. Within a reasonable cost.
Right. Great. I think, Sanjeev, that really helps lay the groundwork that, you followed a path where you were not dependent on fiscal subsidies. You made an economic case, and you also targeted the first most obvious segment, which was willing to adopt this. And I think some things may be now changing with, companies having these net zero ambitions, even, a lot of Indian companies, a lot of international companies operating. So maybe that economics is also tilting, in terms of greener things they were not thinking of before. But going back to, coming back to how to still attract more capital, I'd like to bring in Piyush. Piyush, now you are focused on building this utility scale-based 5 gigawatt portfolio, right? And however, you're you've been described as sitting on the fence to come into the DRE sector. So what will it take? What do you need to happen for you to take that plunge?
Sure. Thanks, Gauri. Yes, so right, we are a utility scale focused platform. When we started off in November 2019, the one of the key focus areas for us was to get to scale quickly. And that was what drove us towards participating in the central agency tenders, SECI and TPC tenders. And over the last 1.5 years, we have been able to now cross a gigawatt. And so now we are having a rethink on, along with this, what else should we do going forward? And, as Sanjeev also pointed out, the problem with discoms is the lack of money. And so therefore, C&I segment sort of hedges you against the that government and government entities pose, which is, of course, the payment delays, etc. And then also, if we are too dependent on government tenders, then there are times when the pipeline almost, when the tender pipeline almost dries out. And so at that, you do. So given that, we are interested in exploring the CI space, also the rooftop space, which is a smaller ticket size. But the fact remains that these two, utility scale model and rooftop model, these are two different models. For utility scale model, you do not need to have a customer acquisition. Customer acquisition, I would still say, is the smaller part of the puzzle. It is basically customer evaluation, which put time and effort. Because as has happened in India, at this point in time, now this market moving beyond the AAA, AA rated, all the cherry picking has already happened.
Right.
So how do you now expand to a market which is not even and small ticket size? So your customer evaluation, customer sourcing, and then you have to execute these projects very quickly. So how do you build that vendor ecosystem who can actually do it on your behalf and who can then continue to service customers, whether it is O&M or payment collection, they can continue doing that. Now, at setting up this business model requires time, patience, effort. So at this point, we continue to remain focused on utility scale model, add some more capacity, but also we are ramping up the team size. But as this side of the business starts maturing, at that point, we will be interested in evaluating the C&I and rooftop space in more detail and see how we can get into it.
Okay, great. Well, I guess, Piyush, what you focused on is really that, it requires a certain mindset change from to a more customer focused business as opposed to more of a B2B type of business. So it's more B2C in some senses. And thanks for sharing that, because that change in mindset sometimes is quite important in these transitioning business models, right? So great. So I think what's really interesting is that the first three panelists, I think you all have laid out, what is needed, what is the gap. Dhruba started with what is the gap, what is the potential. And one always needs to bring the banker in to make things happen, the financing happen. So I'm looking at Jayant here. Now, Jayant, you bring a rich, banking and sector experience, not just from energy, but also from agri and other sectors. So what do you think, can help these customers that, Piyush talked about to be easier to acquire? To be easier to build a portfolio around, because clearly it seems that the C&I sector has reached a certain level of maturity. So now one has to move to the residential and the MSME sectors. So how can you make that difference from the point of view of innovative financing? You're on mute, Jayant.
Am I audible now?
Yes, thank you.
Okay, thanks. Thanks, Gauri. And I must compliment the solar industry, both the developers and the EPCs in India.
Can you speak a little louder? I think it'll be better if you speak a little louder.
Is this better?
Yeah.
Okay, so I must compliment the industry in India to actually have created significant execution capacity as well as costs which are world beating, right? Nowhere in the world you are able to put up a residential plant at less than $1. So ubiquitously, it's not one random plant. I mean, it's considered normal to have a residential solar plant of a small capacity setup at less than $1 a watt. Most of the globe is still stuck at $3 a watt, right? So that covers the point that, the economics is in favor of solar today, whether it is CNI, whether it is SME, whether it is residential, right? The industry has created significant capacity. I mean, I think they can annually do what is currently the deployed rooftop solar base. Just the present players in the EPC and the developer ecosystem can annually do that much just in distributed rooftop, right? But it is a feet on street game, meaning you have to pound payments. You may end up knocking 50 doors before one customer signs up, right? So that requires a very different approach than sort of, and Amplus I've seen do that very well, but that requires a very different approach than sort of sitting and bidding for large projects, right? So that needs that amount of capacity creation on the sales side. But again, there are developers and developer standalone as well as part of utility plays who have done that, right? So if the capacity is there, the cost economics makes sense. In fact, even the awareness is there. When we have been talking to people compared to say 3 years back, more SMEs and more residential customers are aware of this and aware of the fact that it saves them money, right? What is causing the uncertainty for financiers? One, they are happy to fund a large AAA customer buying in open access or rooftop, right? I mean, they are happy to fund portfolios at BBB, AAA, those kind of things. There are lines developed through multilaterals. When you go to SME or residential, some of the risks which people are managing on a pool basis at an overall level start becoming bigger, right? And these are more, I would say, event risks in some cases than actually credit risks, right? For example, event risk would include things like, what happens if an SME factory relocates after 5 years? What happens if a neighboring plant comes up which is taller than this roof, right? So those are technical issues around the fact that the nature of house or house roof or nature of SME roof is not as stable as a nature of industrial roof, because neighbors or the user can change. Then you bring in the policy issues. Sanjeev referred to it, Piyush referred to it, Dhruva referred to it, right? You bring in the policy issues. The discoms are not very happy. On the utility side, that reflects in reluctance to sign power purchase agreements or power supply agreements or whatever they're called. On the distributed side, it translates into the pushback on net metering across multiple states. Many places it's disallowed, many places it's restricted. There are mechanisms in which you can manage the risk the net metering poses to the discom, but right now it is sitting in a 0-1 state, right? So as a financier, this creates situations. What have policy changes? What if a new tariff is imposed? How does my plant viability change? Because as a financier, I'm exposed to the underlying SME's credit risk, but also event risk arising out of the product itself, the solar installation on an SME or residential. Pooling can solve part of it, because equity takes the risk on the pool, but it cannot solve all of it. We feel that the kind of insurance products which people like World Bank and SBI are thinking of for MSME sectors, they could be having add-ons which are more insurance-like add-ons around roof profile change or around policy change, which could help de-risk this for not just SBI, but also, I mean, the products could be offered to the wider market, and they could help de-risk. Right.
So I think, Jayant, that's quite interesting what you said, and I think that's where I see your cross-sectoral experience coming in. That just like we have things like insurance in other sectors like crop insurance, etc., or guarantee schemes, credit guarantee schemes. Some of that pooling can alleviate that policy uncertainty that you talk about, right? That financing can come in and address that policy uncertainty to an extent, but policy uncertainty still needs to be sorted out, right? I mean, one can't have a change in net metering policies overnight, etc. I'd like to bring in Aditya at this point. Like you gave us certain solutions on the financing innovation side. I think, Aditya, what you're doing with the first grid-scale battery energy storage in Delhi, which is also the largest in South Asia, and you work with Mitsubishi as well. I think it'd be great to know from you. And you, of course, also represent the large-scale utility sector, just in terms of size. But it'll be great to know what type of technical innovation you see can come into this smaller scale sector.
Yeah, thanks, Gauri. And I think that's it's really helpful to come in the end after hearing the industry leaders, because clearly as AES, right, we have been working as our core is that of a developer, and we have been doing both utility scale and distributed. And while building all these projects globally, right, there's a lot of learning that we have accumulated. And what we constantly do is we apply this into the way we build projects, and that is where the innovation is coming in. And innovation by way of batteries, innovation by way of bringing technologies where you can build solar projects much faster and much modular. So clearly, and I'm just hearing, and I'll take a moment to highlight, Dhruva said, there's energy transition. Sanjeev talked about efficiency. Mohit talked about ecosystem, and Jayan talked about, certainty, right?
Yeah.
Technology can actually help in doing all that. So if I take an example of a customer, right, CNI customer is already having a solar project deployed, right? But he needs more, right? Battery brings that next level of, a relationship with him, that, more reliability, more sustainability, and that continues in a longer term, right? And similarly, other technologies that I was talking about, which is modular construction. So Jayant raised that point of, that, the customer is moving the location SME. He wants to move the factory, right? So we are building structures which are modular. So instead of, having them ground mounted or roof mounted, right? These are modular structures, foldable. You just, fold them, take it where the customer is. And that is where, companies should be focusing on, because Sanjeev rightly said, we have seen so many waves. Now, the renewables is coming into that segment wherein it will have to go through that change of adopting technologies, both in terms of the way it is being built and the way it is being used. So innovation in terms of the construction, innovation in terms of utilization, innovation in terms of financing, and innovation in terms of business model. So innovation plays a very key role in overall solution that you're providing to the customer. And technology cuts across all of them. So technology is going to play a key role in the transition, and this is going to be there for a longer term in order for renewables to be more sustainable and reliable, because ultimately that is what we are looking at next, right? There has to be a reliability factor. So technology like battery storage, modular constructions can really help both the developers and the customers to adopt renewables. And DRE being, it's all the more important for distributed customers, because they want to reduce the reliability on the grid, right? So this will help them in that transition. So I think this is what we have been applying globally.
Yeah, great. I think Aditya, thanks for pointing out the role of the catalyzing role of technology to solve a lot of the problems the other panelists talked about. But I think what was interesting was you still talked about innovation on financing and supporting the costs at which these technologies, some of these newer technologies may come, because there is a cost of adoption, a cost of new technology. That plus policy uncertainty are some of those barriers that need to be overcome. So we have about 8 minutes more to go before I'd like to bring in Nolte to do the closing. So there is one question from the audience, and it's on policy support. And I'd like to maybe bring in Dhruba back on this one. The question is, Dhruba, that how are you seeing policy support for balance mechanisms going forward? In regions with like high renewable penetration, there are significant generation, storage, and demand management methods to balance intermittency. So anything on the balancing mechanisms and policy support on that?
Yeah, thanks. Thanks for the question. Okay, let me first talk about policy support to distributed renewable energy, and I'll shift that to balancing power or storage in regions where they are. The first part on policy, what I want to say here is, I mean, in India, it is important for the government to not intervene and let markets work where it is possible. That is exactly the point I want to say. That policy, you step out of where the markets are functioning. The problem with policy is there is intervention required, but you intervene over there where there is an economic case. There is a good economic case for rooftop solar. There is a good economic case for distributed energy. You are intervening there when there is a willing buyer and a willing seller. first. Let's first stop that. Point one. That leads you to the next part. The next part is, yes, there is an absolute need for a policy and a regulated tariff for a storage, which is grid connected storage. We don't have a regulation. We don't have a regulated tariff for that. That is clearly a case for a grid infrastructure, which may also transfer what you think about from a green power is concerned. You need policy and then regulation around that, and then tariff setting around it. And the same holds true for where, if you are telling me on balancing power, there is capacities of pump storage that is specifically equivalent to battery storage, and it can handle the peaks, and two, create a certain amount of flexibility when the ramp up is required. So what does the India's electricity transition needs? It needs flexibility to ramp up, it needs storage capacity, balancing power, it needs power markets to be created, but I'm not bringing that part of it. Again, you'll have to let that part of it work. So intervene where it is required and step out where it is not required. Thank you.
Right. So get out of the way where it's required and just be there only for the amount that's needed. So we have 2 minutes, and I'd like to literally spend 30 seconds on each of the panelists to share, the last 1 minute, one takeaway you want to leave policymaker with. So Aditya, what's that one thing that needs to change?
I think Dhruva has already said, don't intervene where it is not needed. Intervention is needed where you need to support, not to bring in new technologies, not to obstruct it.
Great. Jayant, what's the financier saying? You're on mute.
It's a step back from a financier model, but really, if I have a wish list for the policymaker, in addition to what Dhruva said, the consumers in India need to have a pathway to go 100% green. Today, they don't have that. Even if I use my roof, it's 5%, 10%, 20%, right? I don't have that practical pathway, and it has to be a practical one, can't be a theoretical one, right? So that's a wish list item.
Okay. Piyush, how do we get you back in? How do we get you into this sector?
I think as far as policy is concerned, the intent is good. The problem is in execution. Like, for example, for rooftop solar, they are enabling policy mechanisms, but then when it comes to DISCOMs and granting approval for net metering, and I think this was referred to earlier in the conversation, there lie the challenges. So I think the execution has to be aligned with the intent. That's one. And second thing, I think the policies now need to be more forward-looking. For example, if you talk about storage, then certain states have questions as to how storage is treated. Is it treated as a separate generation source? Or if you, because of storage, you are oversizing the capacity behind the meter, then they don't allow that. So one has to be a little forward-looking in terms of formulation of policy, because these new technologies will change the way the projects are getting designed and the way they are supplying to the ultimate customer.
Right.
Their problem.
Right. Great. And Sanjeev, what's the next wave in terms of the energy transition?
So I think now the situation, if you're asking with respect to specific energy transition, it's something which every customer wants. Now it's a government has to make a very informed choice that whether we are going to stop it or we are going to allow it. Because at the end of the day, even if you set up this 40,000 megawatt of rooftop, this is not more than like 2 or 3% of the total energy consumption in the country in terms of the energy thing. I think it's just the fear in people's mind or the distribution company's mind which is stopping it. And the actions have to follow the intent, because on one hand, we can't keep on saying that we want to do 450 gigawatt, we want to do 40 gigawatt rooftop. On the other hand, every distribution company of every state wants to stop it. Ministry of Power can come out with a notification saying net metering only for 10 kilowatt. So you can't have these type of dichotomy of saying like we want to achieve this, but we'll do only this much.
Thank you, Sanjeev. I think that gives us an insight into the next wave. And thank you all the panelists. And back to you, Nolti, for your closing remarks. Thank you.
Gauri, for moderating a great discussion. I also want to thank our partner CPI and the panelists for their insights. Today's discussion covers some key areas on new innovations, business models, de-risking instruments, along with regulatory and policy support that could really help unlock the capital required for increased DRE expansion in India. And I think we all agree DRE could play a huge role in not just meeting India's RE target, but in also helping India meet its overall sustainability targets. So with that being said, this concludes today's program. I hope you all stay safe and healthy, and I look forward to seeing you all soon. Thank you.
Thank you.
Thank you.
Thank you.
Gauri. Bye.
Bye.
Thank you. Bye.